Today I'll show you something interesting, right? So today we have been tracking the markets, especially the indices. Okay, so today I'll show you something with Nifty and how to monitor price action. Okay, so along with the open interest. So that's what we'll try to cover it in today's session. A small session of around 25 minutes. Okay, so I'm not going to take much of your time, guys. A short presentation on using market profile chart along with open interest. So that's what the session is all about, right? Clear? So on the screen, what you see is the Nifty market profile chart. Okay, so it's a Nifty market profile chart where I used to trade and day trade using market profile chart. So right, so quickly getting into the price action today, let us take a couple of references, so where and what I'm interested in tracking for the day to begin with, right? So yesterday we had a nice open drive in Nifty. Okay, it's a kind of short, immediate short. Okay, as soon as you open down, it's an open drive, right? So at least if you don't shorted at the A period, at least you should have shorted the B period, right? So it was a nice trending day, and if you see that we would have a, a double distribution profile over there, right? So you can see here. Okay, this is what I say is that this is one distribution, right? So this is one distribution. A small gap is there. Gap in the sense a single print is there, and followed by another distribution, right? So we have first distribution over here, and you have a second distribution over here. So what I do typically on this kind of double distribution trend days is that I look to be bullish only if price accepts above this particular double distribution balance. So the balance which I take here is at this particular level. So let me draw a line over there. Just a second, guys. Okay. So what I typically try to monitor here is I'd like to draw a line over here because we have closed inside the second distribution, obviously. So you can see the hash mark over here. So the hash indicates the closing price, and we have closed inside somewhere around the second distribution, right? So I would typically place a line over here on the second distribution, right? So for the current day, where I don't know where markets are going to open. I don't know whether it is going to go gap down or gap up or open below the previous day low or previous day's high. I know I don't have any idea where markets are going to go open the next day, right? So once markets are open, then I can fairly decide what I should do. Okay, whether I should trade for that day or should avoid trading. So all the decisions, whatever we take, which we mostly take it in the live markets, right? So this was my reference for the day actually. So probably I'll use another reference as the day low and day high. These are some of the intraday references typically I use. This is the day low and typically this is the day high. Okay, clear? So day high, this is your balance reference. So if you want, I can put it as something like that. DD balance reference, something like that. I can put it over here. So to keep things simple, right? So I'll be bullish only above this particular level. So this level comes around somewhere around what is it, 8348, 8350, somewhere around. So typically I want to be bullish above 8350. I will be bearish below this particular level. So that's what my trade idea would be. I don't know where it is going to open, right? So what happened here is we opened somewhere around inside the period is range and the period is value area. Here what you see is the value for the, this red color bracket is the value, and we opened somewhere typically inside the period is value area, and we bounced up, right? So we moved higher somewhere around very close to our 8350 zone. From there we crashed down, taking out the period is low. Okay, so this was the period is low, and we took it out in the first A period itself. Okay, and after that what you can see that B period, right? So B period is an inside bar. Okay, so we don't get any extension on the downside in the B period, right? So typically I was sensing that okay, the selling might not be that strong when I get to know that okay, there is no extension on the downside in the second 30-minute candle. That is what you call the B period. Okay, then I thought, okay, might be okay, selling might be not that seriously strong, maybe. And there was a 9 o'clock. There was an announcement in the TV running. So that also created an interest to track how things will change once the market opens, right? So that was also one trigger. And when I see this inside, but I was looking that okay, we may come and trade inside the pre-days range. Okay, so if there is a strong selling, the price should go down slowly, gradually, or it may go fast. Okay, there should not be any what do you say? There should not be any pullback inside the pre-days range. Okay, that's what my anticipation. But still, I'm not sure about how the strongs there, how this selling is not so strong, right? So I thought, okay, it's kind of weak selling. Maybe by the day traders are doing the job, not an institutional presence. That is what it was telling me. And now let me pull up the open interest chart for you guys. Just a second. Okay. So this is the open interest chart for the day. Here I have this is the intraday line. So this line refers, okay, splits the multiple days. Okay, so here the data starts from here. It's plotted on a 5 minutes time frame. So I have taken 8,200 strikes, 8,100 strikes, and 8,000 strikes, both call and put. Okay, indicated by different colors. So as you see that, okay, when markets are coming down, right? So when markets are coming down and crashing down, something like that, right? So what happens in that open interest chart? Okay, so what's happening in that open interest chart is that you can see here 8,000 put. Okay, 8,000 put is this particular line is gradually rising. Okay, it started rising sharp from 950, 920. It was going on crazily. So it started somewhere around 99,6450. From there it went 1,56. Okay, something like that. Okay, a bigger number. It's crazily going higher. 8,000 put. So I was thinking, right? Okay, market opened where it opened somewhere around 8,250 somewhere around. So I thought, okay, maybe 8,000 will act as a strong support for the day. Probably whenever we dip towards 8,000, probably it act as a kind of support. Why? Because these put writers, okay, 8,000 put writers are writing, and even though market goes down, they are still writing. Okay, that's what we are getting from the picture. And for the market profile chart, what other information I have been getting over time to time, right? So look into this particular information, right? So it's a very crucial information for intraday traders out there. You can see here, right? So the second 30-minute candle, okay, high of the second 30-minute, that is a B period candle, is just one tick above the what is the midpoint of the first 30-minute candle. Okay, one TPO. You can see, right? So the white color horizontal bars are there, no? Small white color bars are there, right? So that is the midpoint of the previous candle, and B period high was there, right? So B period high was exactly one tick or one TPO above the midpoint of A period. So this tells me that all are intraday players. All intraday players are coming and trading the markets and selling that. They are buying the dips and they are selling the rallies. That's what they are doing it, right? So you can see here multiple times it happened. One time happened over here, right? So what I can see here, it happened over here. Then if you zoom it out, you can see when that C period was running. Okay, C period was running there, and you can see the next D period high. D period high also, it comes exactly from the midpoint of C period coming down. Then again, there was a up movement in that E period, right? So you can see that E period low was exactly one tick, one TPO below that deep midpoint of D period. So what I can see is that they are buying here, selling here, exactly from what is it? Visual references. So these are all visual references, right? So here one visual reference is there, and you can see here earlier there was some visual reference here. Here some visual references are there. Then as we moved here, okay, some 3-4 visual references are there. So who will do all this crazy stuff over there, right? So it's not an institution, it's only intraday traders, retail traders who do all these kind of visual things over there, which will very clearly visible over here. Okay, so that's the reason why we got this spike later in the day. So what happens is markets are not going down in a big way because you have that 8,000 put writers over there. They are keep on writing the market, writing the particular strike, and not allowing markets to steadily fall to certain extent. And you can see here, right? So this green color line is there, no? Yeah, green color line represents 8,200 call option. So from the starting itself, they are restricting this particular area. That means whenever Nifty goes to 8,200 nearby levels, they keep on selling that. Because you can see here, right? So the green color line is rising, rising, rising from the starting of today's session. Okay, it started rising from somewhere around 14500. So 145,500, somewhere around it. The numbers are going crazy, and it keeps on increasing, 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 increasing. That's all. Till somewhere around yeah, down somewhere around 15, 3 o'clock, it was still rising, right? So somewhere around in the mid of the session, around 11, 11:30, if you see, it's still increasing. So it tells me that okay, they have sealed that particular strike, that particular zone for today. Okay, so 8,200, you cannot sustain beyond that level, or when you get very close to that level, you would have probably look for rejections to short the market. Okay, so that is one such information I'll be getting from this open interest on the call side. And you can similarly see what is happening on the put side. 8,200 put is this particular red color line over here, right? So in the morning, what happened? That's what I told. In the morning, when you are getting this inside bar, the second 30-minute candle is an inside bar, right? So when you're getting this inside bar, what's happening on this open interest? The 8,000 put writers are writing, call writers are also writing. That means nobody wants to give up. Okay, so these both the lines are moving up. That means call writers are writing, put writers are writing, and they are trying to defend on either side. So call writers are trying to protect that 8,200 level, and they want a market to settle or market to trade below that level. And these put writers, they want market to trade above the level. So there is a clash going on between these two guys. And now at around, you can see this crossover, right? Let me mark it over there. This particular crossover is there, no? This particular point. Maybe I can put the cursor over there so you can see the time over there, right? So you can see the time here. When I put the cursor over here, you can see that around 10:10. Okay, around 10 o'clock, past 10:10, there was a crossover in this. Crossover in the sense the call option was increasing, right? So the call option open interest was gradually increasing. Okay, then at the same time, what happens is the market wants to go down. Okay, market wants to go down drastically. What happens? This put writers has to cover as the call writing is increasing. The put writing has to unwind. Okay, so that's market will go down. But what they are doing, see, they are keeping it flat till 10:10. This crossover happened, and you can see still maybe around 10:50, 11 o'clock. They are still keeping this 8,200 put flat. Okay, that means markets are not falling in a bigger way around at least at 10:50, 11 o'clock. You can see that this is the typical candle, right? So this thing. Okay, not markets are not falling big actually. Even if it falls big and it climbs back actually, that is what happening. And similarly, you can see that what is that 8,100 also 8,100 strikes also have been plotted over here. 8,100 P you can see. Okay, this is the color which is used to represent the 8,100 put option. You can see this. This is also increasing, right? Markets are coming down, and these guys are writing 8,100 put. Gradually, they are writing. They are writing till 1420. That is 220. This strike is also increasing. Okay, that means markets are not going to go beyond 8,100 levels. So what happened? See what happened here all the way until what do you say of 220. Markets are not going to trade in a bigger way, right? So you can see here all these are complete rotations, right? So all these rotations are happening. All these rotations, the price coming up somewhere around these 8,080 odd levels the morning session, and it sharply pulled back inside this consolidation tree. So all the sideways price action was happening, and these guys are were writing that 8,100 put, keeping the market in the sideways mode. So this is the open interest chart. Okay, and these guys are crazily writing this 8,100. Okay, 8,100 put options. So where is 8,100 call? 8,100 call is this yellow line, right? So they are not up to the mark. Okay, that means they are not writing 8,100 call because they don't want market to trade beyond 8,100. So 8,100 put they have been writing, and they are keeping the markets at, that is, at a level that whenever it reaches near to 8,100 or that level, it keeps on bouncing. So what I did typically today is I was waiting for the market to short the market, because I know that I know that 8,000 is being protected at any cost. So probably we won't reach there. Okay, but on the downside also, this 8,100 P writers are also not going to give up, right? So these two informations I know from the early trend, early morning itself, it's happening, right? 8,200 call is increasing, 8,000 put is increasing, and 8,100 put is also increasing. If anybody has to give up, right, so then only you'll have a direction, because everybody is fighting over there, then you'll not have a typical direction. Maybe all those retail traders will be there, and they'll be caught on the wrong side. Okay, so that's what happened today. Here you can see. So what I was doing when I was seeing this information along coupled with these multiple halfbacks, I thought, okay, fine. So I was anticipating a stop loss hunt to happen on either side. I don't know which side it is going to happen. Okay, I cannot say that it will go and hit here and it will come down, and or it will trigger this and it will go down, go up, right? So I don't know which side it is going to happen, but I am pretty sure that something is going to happen, because everybody is fighting, and they are buying at and buying and selling at every halfbacks, right? So earlier, what happened? We had a halfback here. We had a halfback here. Market went over there, cleared. This halfback was there, and that got cleared, and we came down here. And first, they cleared all the downside references. They all cleared the downside, all weaker references. They have cleared. So when you have these kind of references built on both sides, what we can do is that, coupled with open interest, we know that okay, markets, they are going to keep the markets in a range. So we have to play on any one side, right? So we don't know which side they are going to hunt the stop losses, but as far as I am concerned, they'll hit any one side on first, and then they'll focus on the next side. So when G period, H period, everything was getting traded, the downside hunt have been done. Downside, we don't have much references. We had only one intraday dip buyers over there, and they got hunted during the F period and G period. You can see this F period and G period lows are very close to each other, and A period, C period, A period low also very, C period, A and C are very close, and that got triggered, and the D period, that spike, D period spike got cleared. These two are references. And again, you got F and G very close to each other, and that got cleared with a H. Okay, so all these dip buyers have been taken out. Okay, taken stops have been hunted. So once the downside everything is over, then the only job is to hunt on the opposite side, right? So that is one information I had. So I don't want to do any contra trades. Contra trades, this is a major trend is down. I don't want to go and counter trade this particular market. So I was waiting for to short the market. So I know where to short it, because I know from the open interest that 8,100, okay, 8,100 they are going to seal it. Sorry, 8,200 they are going to seal it, because it's continuously rising. Okay, so 8,200 I'll be interested to short. Market reaches 8,200, a kind of spike towards 8,200. So what happened here is that what happened here is a sharp spike towards 8,220. Okay, I was looking for this particular halfback, intraday halfback, to get cleared. Once this halfback got cleared, and in the next 5 minutes candle, I got a rejection. So this was the kind of a spike with a long. If you look into the candlestick chart, it was something like a spike. Okay, candle. What do you say? A long wick candle was there. So what I did was I was watching for the next candle, and the next candle I shorted with a stop above this particular candle in the 5 minutes time frame. In the 30 minutes time frame, I cannot go and trade it. Actually, I was looking for a 5 minutes time frame, because I know this will be hunted. If market moves up, it will be hunted, right? So they are moving the market only because to hunt these guys stop. That is the only reason market moved up. That's all. because we know that it's a weaker reference, right? So we can anticipate that. So I was waiting. Why you should ask me why I should not trade these long signal, long over here, because all the downside references has been done, and now we should target the upside references. Why you want to trade this actually? Because I don't want to trade contra with respect to the major trend. The major trend was down, so I don't. I want to short the markets on every pullback until and unless it closes above 9,000 or 9,050 levels. So I was looking for shorting opportunities in the early morning. I missed out the fast move actually because it is very fast, and I was not able to capture that. And I was waiting for other opportunities. When I was spotting this half back and all those things, I thought, okay, today it's going to be a tough day for all people to trade the markets. So my trading would be something like it will come in the second session or something like that. So it happened over there, and I shorted in the 5 minutes time frame where with a very small risk. Okay, and I was expecting at least this to test the developing point of control or the VWAP, at least the VWAP, or then I can anticipate towards the day low test. So that's what I didn't wait for a day low test to happen. I booked somewhere around 8130 odd level, somewhere around near to the VWAP or something like that, or near to the developing point of control at that point of time. Because I don't know where this is going to go, because the RR was pretty good actually. So I exited somewhere around 8130. I shorted somewhere around near to 8,200. Okay, so why I did, because of only because of this chart open interest. Okay, we know that even though markets are going down or markets are moving up, these guys are not at all what do you say, not at all interested to cover their writing. Okay, you can see that the spike happened, right? So see this candle high period, right? So this spike happened, I think it's 2 o'clock, I think, yeah, 2 o'clock or after 2 o'clock, the spike happened. And you see that whenever this spike is happening, in that is there any major unwinding happened in 8,200 call? No, nobody, nothing happened. Okay, so nothing happened, and we saw that it went there and it came down. So that's one interesting setup. How to combine price action or a market profile chart along with the open interest will give you a very good trading edge actually. So you know what your because you know that okay, weaker references are there, and when to hunt them actually. So coupled with open interest, I am very pretty sure that okay, 8,200 guys are going to seal it out. So any spike towards 8,200 is a solid shorting opportunity if you are able to manage your risk well. Okay, so I taken that trade because the risk was very small for me to manage. If it would been a maybe more, my trade would be somewhere around 60 to 50, 60 odd points. I'll be able to take risk, and I'll not be affordable to take risk more than 60 or more than 100 points in Nifty. Okay, Bank Nifty is affordable. 100 points is okay because of the lot size 20. It's pretty fine to take 100 points risk in Bank Nifty, but not in Nifty. Okay, Nifty, my affordable is something like 50 to 60 points. It's okay with this high volatile environment. So the risk was manageable for me, so I went for the trade, right? So I know I have the conviction that 8,200 is going to be protected on the upper side, and that happened. And yeah, that's good trade actually. Only one trade I did today, nothing else. After that, I was keeping watching the market itself. Okay, guys. So I hope I have explained you the combination of market profile along with open interest, right? So stay tuned. We'll post a couple of videos on other interesting things when it happens in the live market. Okay. Thank you guys. Have a nice day.